Hello, clients of Friedman Canterberg and Company. Alan Friedman and Daniel Job here. We're here to talk about another major tax ruling change that took place in this year in 2018, and it relates to sales tax.
Ooh.
It's a big topic. You had the federal Supreme Court come out with a decision that basically paves the way for states to charge sales tax to out-of-state residents who are transacting business into their states.
I bet the states are excited about that.
They're thrilled about this. You know why?
Wow.
Cha-ching. There were a lot of sales that were lost, sales revenue that was lost to these states, and now they have a way to collect that sales tax.
Yeah.
I'll give you an example. If you have a retailer that is in Connecticut, our state, and selling to a resident of California, that Connecticut retailer, unless they had a store in California or inventory in California, was not required under the old law to collect sales tax.
Are you referring to that cool term called nexus?
I am. Which is a car?
It's a car.
Yeah, exactly.
No, I think it's what your partner drives.
That's right.
Anyway, so
It's a
nexus,
tax. It's a tax term.
It's a tax term, and basically back in the 90s when the original Quill case, that was the first Supreme Court case.
1992, right.
Yeah, they were really just keen on physical presence. The Supreme Court said unless someone has physical presence in the state, they
That's
don't
right.
have to collect sales tax and remit it. And again, the four things for physical presence were like a location,
Right.
inventory, employees, or driving into the state to do business. I think that was the
Exactly.
four. But this new case, what do they call that?
The Wayfair Act.
That's right. The Wayfair Act, the new term is
Right.
economic nexus.
What is economic?
Economic nexus, they've ruled, and basically the Supreme Court said, we don't think this is our right to jurisdict over. So states, you do what you believe is best.
That's right.
And the states have come up with a term, economic nexus, and now they're looking at the amount of sales that are brought into their state
Right.
from an out-of-state retailer.
Essentially, whether a retailer has an economic benefit or economic interest from deriving revenue from that state.
Right, and that's not just internet sales, by the way.
No.
That's also for driving sales, and so it's a cumulative amount of sales. So, Alan, go back to your example. What does that look like now?
So now what happens is if you have a retailer in Connecticut who's doing a fair amount of business in the state of California, even though they don't have a presence in California, they may be required to collect California sales tax from California residents. And there are thresholds. Each state is setting their own thresholds as to once you hit a certain dollar amount, then as a retailer you're required to collect that sales tax.
Yeah, that's been probably the saving grace in this for right now, is that they're not just coming out hard and saying from sale $1 you have to do it.
And you know why it's a saving grace? What's the burden to the retailer?
Yeah, that's what we're most concerned about, and that's why we're here today, is that, selling online is great, but when you think about the registration, the figuring out the right sales tax amount, collecting, remitting, when you have to file the return, there's a lot.
Collecting sales tax from potentially 49 other states. And some of them have towns and cities that have sales
You're
tax.
stressing them out again. Alan,
Sorry, I don't mean to do that.
Let's give them some advice.
Okay.
So here's what we would recommend. Number one, and we think this is first and foremost, you need to have a way to track how much you're selling into a state. They're either looking at total sales dollars or number of transactions. So if on a monthly basis you could know what you're shipping into any particular state, you'd be able to prove what's going on.
That's right. And unless you're a really large retailer, many retailers will probably escape the requirement to collect sales tax. But again, I think some of the thresholds are $100,000. If you're a Connecticut retailer selling more than $100,000 into California, you have nexus, economic nexus, and you're required to collect that sales tax and remit it to the state of California.
I think California's amount's higher. So again, don't hold us to that
That's right.
exact
That's
number.
right. That was just an example, but that's right. And they're setting them at all different ranges of dollar amount, or as you say, transactions.
Yeah. The other thing that they can do, really, is that if you think the administrative burden is going to be too much, there are online resources. Just go out and look. Just put out Wayfair Act, put sales tax collecting. You're going to find some resources that you may find beneficial to your company to help you track and be able to properly register to report in each of these
Right,
states.
and there's third-party software providers that are adding on sales tax collection applications that you can add on to QuickBooks and other kinds of accounting applications to help you with this burden.
Yeah, so you can tell how important this is to us, and if you have questions, please contact us. We just want to make you aware of these changes and try to give you the tools to make the best decisions for your business, but we value you as a FKCO client, and we look forward to joining you again next time.
Exactly. Thanks for having us speak to you.